Hey, what's good, everybody? Welcome to the Closing Beat. Happy Monday. I'm Dustin Tibbetts, financial advisor here with Jazz Wealth Managers, and this is our show that we do just to go over the stock markets, the good, the bad, and the ugly. We are financial advisors here with Jazz Wealth. We build and manage our own funds, and so occasionally I'll point out if one of the symbols are in our funds just to share with you. But if you'd like more details on the funds that we build and manage for our customers, they're all laid out right on our website, all the performance, all the objectives, and kind of how we go about doing what we do here at Jazz Wealth. Well, anyways, it's Monday. You should know that on Friday there will be no closing beat. A bit of a family day. Going to take some time off. So we'll still do the normal recording that comes out at 1 o'clock. And that's it, really. If you're thinking about starting something new as far as retirement investing, go to Jazz Wealth. Check us out there for a little bit. If you have any questions, you'll know where to find us. Anyways, the stock market today, we got a little bit of a gain. Here's the thing. We started off really strong, still a positive day, however, not as strong as we were. So what that leads you to think is, hey, we're a little extended in the short term. I know it sounds like a broken record where people seem to think that, or where I keep saying, hey, looks like we're a little extended, looks like we're a little extended. I keep trying to point out the percentage of stocks that are sort of over their 50 days and by how far they're over their 50 day. I like pointing out stocks that are extended. Did a whole class for our customers on overbought S&P 500s and what does that mean? So sort of what we're seeing and about to see really doesn't shock anybody, at least as far as our customers go. Basically, you had good news, right? They extended the Chinese trade deadline. However, you now have people starting to question whether they've actually priced in the trade deal. Like, have we already expected that there'll be a trade deal between us and China, some kind of deal, and the markets have already reflected that price. So today you kind of saw that come to the forefront. You saw people sort of go, wait a minute, maybe this rally was because we all expected a deal. And so because of that, I think you saw a lot of those sectors start to sell off today. If we do pull back from here, I maintain it's not that big of a deal. I think it's a worthwhile sort of pullback. Warren Buffett himself was asking for discounted prices in the market. We'll cover that in a second. Nonetheless, you got the Dow higher by 60. We were higher by 200 at one point. S&P higher barely by 3. If you look at the chart down at the bottom there, you can see how we sold off all afternoon, got down to almost even for the day, but the market's closed, so we were saved by the bell. The Nasdaq added 26, about 1/3% on the day. Not a real big deal there. Again, the focus is, has this been priced in? Has the trade deal been priced in? A couple stats for you here. If you look at the S&P 500, you have 27% of the S&P 500 is within 5% of hitting a new high. 61 names hit new highs today, new 52-week highs, and 27% are within 5% of hitting new highs. 41% are within 10% of hitting new highs. So you can see sort of the momentum, and if you're trying to find extension or sort of short-term overbought conditions, there you go, right? You could read that stat either way, whether you're a bull or a bear, so just pointing that out for you. Let's go over to the charts here, and we'll take a look at what we've got. You got the S&P 500. That's not the S&P 500. Come on, Dustin, get with it today, man. Here you go. The S&P 500 moving into the resistance area. What did we talk about? We've had this red box on the chart ever since this S&P was down here. We talked about this resistance. That's where we saw resistance today. If we zoom in, you could see that it's not that I'm magic or somehow figured something out that you guys didn't or anybody did. It's what technical traders are looking at. We broke into that 2800 area. We saw weakness in that area. I would expect that unless that recovers like tomorrow and we start to trade over it, then you start to see people say, okay, that's enough. Let's pull back from here. There could be any news overnight that causes it to shoot higher, but for now, it is a known resistance area and it is behaving as such. The Nasdaq 100, just above the 200-day moving average. You have a lot of indecision here, remember. We've talked about this every single day. The indecision at the 200-day moving average. You don't want to see that, right? You want to see confidence, bullish pressure, force above the 200-day. We're just not seeing that. So if this pulled back here, I wouldn't be shocked at that either. Not a big deal. And the Dow, less than 3%, was less than 3% from hitting new all-time highs. The pullback there towards the end of the day gives it a little bit more room than that. If we just ran to these highs, I just think that'd be ridiculous. To me, I don't know. It sounds weird, like how could you cheer a market lower? But like Warren Buffett was even saying it today, you need that. You need things to pull back to give discounts to people that like to buy them. And I just feel like, man, you need a little bit of a discount. Scare some people out so other people feel like they're getting a deal, because otherwise you got people like Warren Buffett just sitting there going, I'd love to make a deal. I'd love to buy some big position, but I can't. I can't justify it to my investors. So understandable there. Anyways, those are the individual indices. I did want to point out the Russell 2000. That did finish in the red. Well, now it's in the red. Also at the 200-day moving average, known resistance. Just know if the markets pull back and you're not sort of familiar with technical analysis, the market's pulling back from here, there'd be a lot of people on TV going, well, of course, right? We hit resistance, and making it seem like they know what they're talking about. I'm sure they do. But anyways, sector-wise, you got the price of oil lower today. Kind of a little breather after bursting up higher there out of the comfort zone we've been calling it there. So a little bit of a pullback, 3% today. A lot of it was Trump tweeted that he said, hey, OPEC, oil prices are too high. He wants lower oil prices. OPEC is cutting production in March. We've covered that. You're cutting it by a lot more than expected. You also have the effects of those Venezuelan and Iranian sanctions really starting to show up in global oil supply. Not so much here in the States. We're cranking out the shale production there. So we're we're producing like crazy. The rest of the world's like, let's ease off a little bit. Bit of a tug of war. We pretty much cover that every day, so we'll continue down that path. If you look at the real performance today, there wasn't really any amazing standout sector. It was sort of spread out over a couple different sectors. You had the banking stocks, got about 0.5% on the day. You had tech stocks. They also got about 0.5% on the day. I maintain that this is pretty much extended in the short term. I would be interested to see a pullback here. I think that'd be warranted, provided there's no further news, nothing exciting. I think you actually do see it pull back. Retail stocks, about 0.33% towards the end of the day. And so you've got this little spread and a little bit in energy there. But other than that, those were sort of your okay areas of the markets today. What was the other one? Oh, healthcare finished about even for the day. That one was better. Transports flat on the day. Nothing to really scream and get all excited about here. Commodities, DBC is one you can use to look at that if you like. Down 1.5%. And then, of course, any oil-related ETF also lower. Oh, REITs and utilities, they did pull back. It's totally normal, right? REITs, you could see the screaming move they had there. I got a video coming out maybe tomorrow. Wednesday, sorry. It's coming out on Wednesday about investing in REITs, if that's a worthwhile sort of thing there. Some stats and stuff. Oh, and then utilities, last sector there, also ran all the way back up into a known resistance. Prior highs went very quick, very fast. It'd be like running straight up a hill. You are running straight up a hill, you're going to run out of steam at some point, and nobody would fault you for doing that. You ran straight up a hill. So that's kind of all my geeky talk there for that one. Okay, individual stocks in the news today. You might see General Electric. They're selling off part of their healthcare business. They still have another part that they may IPO. I didn't get a chance to write about it, but that may be an IPO later in the year. These guys are restructuring. They're rebuilding. They're trying to get things done to clean up the balance sheet, lower the debt. There's not much they can do about pensions. That's like a $20 billion sort of expense they got to deal with there. But nonetheless, GE's up about 50% since hitting this low back in December. So people that were the bottom pickers or whatever got about 50%. You've also reached about the target that everybody has, about $12. All those analysts, the big name analysts, had all said about $12 if it does rally is probably fair value. Well, today they announced they're selling part of their drug company to Danaher, which is symbol DHR, I believe. I don't look at this one often. Yep. So Danaher buying it for $21.4 billion. They're going to use the $21 billion in cash, by the way, to reduce debt, strengthen balance sheet, all coming from the CEO. Those are his comments. And the deal should be done by the end of the year. So a little bit of excitement today. GE up about 6%. You don't see that often. You got these two names. We talked about this on Thursday and Friday, Barrick Gold and Newmont. So Barrick Gold wants to buy Newmont. Newmont says, no, we're good. Just leave us alone. Barrick Gold says, sell to us or we're going to start what's called a hostile takeover. Imagine like pirates jumping on the ship trying to take over. We talked about this on Friday, the two ways that they can go about doing this. Well, Barrick Gold officially took their shot today with the official offer to buy the company out straight up in cash, I believe. All stock. $18 billion. So a little bit of volatility there in that one. Let's move on to Berkshire Hathaway, because that's all anybody cared about today. Should we look up Berkshire Hathaway? Let's look at the cheaper stock. There you go. So that's Berkshire Hathaway. They reported earnings, $2.32, $1.85 was expected. They did well, right? Revenue a little lower than expected. They actually were down $25 billion in the fourth quarter because of, well, the markets fell, right? So nobody blames a brother for taking a little pullback there. So what was interesting was Warren Buffett, it's one of the most widely read annual letters to shareholders, and they're collectible. They used to be collectible. Some of the older ones are. Anyways, a lot of things. There's just so much there. So he took a shot at the doomsday people. Everybody that says, I'm going to go buy gold because the world's going to hell and I want to own gold. He took a shot at you guys. He talked about him selling off. It actually wasn't him, but he talked about the company selling off a couple million shares of Apple. He basically said, if Apple was cheaper, I would buy more of it. The theme of his story, by the way, was if things were discounted, I would buy more. Think about that just for a second, right? We could focus on this for hours, but just think about this. If the smartest and most publicized investor of all time is saying he would buy more if the markets were cheaper, but yet when the markets fall, the average investor runs for the hills, right? In December, $44 billion left 401ks because the retail investor was scared. What was Warren Buffett doing? We talked about this, right? I remember teasing you guys. Turns out he had a big deal. He wouldn't say what it was, but he had a big deal on the line. He was going to spend a ton of money on this investment. They couldn't make the deal happen. He was shopping, and in a big way. He wasn't nibbling, going, oh, well, what if the markets fall a little bit more? He was diving in, trying to make something happen, and continues to say he will try to make something happen in a big way, talking like they call it a whale-sized deal, right? He's interested in buying more Apple. He's interested in buying more in the finance space. He's interested in buying, he likes banks because they're just cheap right now. But the point of the story is the man wants to buy dips. So if you can wrap your head around the idea of when the markets fall, you buy that. You're not going to guess the bottom. You're not going to guess the top, really. But when the markets fall, I want you to picture Warren Buffett, go back to when we were talking in December, that mindset, right? Did it just pay off? Will it pay off in the future? It will always pay off. So I get a lot of comments on that one where people are like, you don't know if the market's going to fall forever. I don't care, right? The market recovers 100% of every decline 100% of the time. Some are longer than others. I get it. But anyways, that's all. I didn't mean to take time on that one. So Berkshire Hathaway, basically flat on the day. A couple other stocks here, and then we'll move on. Spark Therapeutics, that was all over the headlines today. This company is getting bought out by Roche, or Roche, however you say it, overseas. The point of the story is it's double the value of the company. This Roche, or whatever, is buying the company for twice what they're worth. Therefore, shares were higher. There's a lot of other names that were higher on that. Was it Bluebird Bio? This is sort of speculated to be the next one or another one. So that's that. Let's move on. Etsy. Etsy higher, beat on earnings. That just came out here a little bit ago. That's a break to new highs. Very nice. Shake Shack, I got an alert on this one. That one's higher. That one's in our mid-cap fund, so that's good to see. Beat on earnings, beat on revenue. Same-store sales higher. Nice. A couple technical charts for you. It looked like Facebook was starting to move out of this little short-term downtrend. For those of you short-term traders, that's a tough one, I'll be honest. It looks promising, but you also have the markets extended. The timing gets a negative on that one. Anyways, Apple moving out of its range today, or at least trying to move out of the range. It did better earlier in the day. Could be something there. Remember, this one, all the stocks in the market and the indices are all trying to head back to the 200-day and have been pretty successful. Apple has underperformed. So if you look at a little breakout like this and you think this is an opportunity, you have to discount it a little bit because the stock has underperformed. I just thought it was kind of interesting there. And then JP Morgan, it didn't finish this way, but if you just want to geek out a little bit, draw a little downtrend line, it's broken above there. If banks continue to sort of perk up and maybe take a little break and then perk up, this one sort of sticks out to me as one that would be one that gets upgrades, analysts start talking about it, and maybe does well. So I don't know. I just, you see things, you want to share them with you guys. That's all I got. Anyways, if you have any questions, I'd be happy to answer them, but that's all I got for now. I'm going to head back to work. Tomorrow, where's my list? Where's my list? You got AutoZone tomorrow, Discovery, Home Depot, Macy's, Smuckers, Mylan, they make the EpiPen, generic drug maker, and Toll Brothers. Speaking of Toll Brothers, tomorrow and Wednesday, every home building, home sentiment, existing home sales, pending home sales, all of that real estate news comes out tomorrow and Wednesday. So I would expect that to be, pretty busy. We'll see what happens there. And I don't know, some of you're sensitive on this, I understand. Altria, cigarettes, Barron's wrote an article that said the stock is a bargain in they call them sin stocks, like, it's bad for people, you shouldn't invest in that stuff. But they said that's a great value there. I would agree, although I can't technically agree. I just thought it was interesting. Every Monday we cover some of the Barron's articles because they're very popular for putting stuff out there. They also said something about NVIDIA, that the stock is a bit pricey here based on the new chip and the, quote, stumbles from the recent chips that have come out. I haven't really followed it too much, but they said the stock's expensive because of that. That's pretty much it. Barron's was pretty quiet. ENTG, it says, sees potential upside, $50 a share following that recent merger. That would be impressive, right? So it's at 37 at the moment. ENTG, Integris company. I don't really follow that one. Okay, yeah, if you have any questions, I'll be happy to answer. AT&T, I didn't look at that one today. Didn't come up on the radar. Very quiet. So AT&T is stuck inside of a range here. It's another one that you look at and you go, why should I believe this stock is going to be strong? Everything else has rallied even just a little bit, but AT&T is stuck in this range. I give it a sort of a relative weakness. Be a tough one to be excited about. And only because it's moving sideways, Enrique. Just moving sideways. If it showed any sort of performance with the market, you could get more excited about it. Yeah. Coca-Cola. So Coca-Cola is still fending off their earnings report, where last week, the week before, the guy from Coca-Cola said headwinds like 50 times in the earnings announcement, which is never going to be good for a stock. So that one's still fighting that off. A couple downgrades as well. Yep. Feeling about the data centers. I haven't looked at a lot of them lately. You got to be careful about price on these. They sure think highly of themselves, right? At least the ones I've looked at. Your Cone and DLR, not bad. Still a little overpriced from a valuation perspective, in my opinion. I don't spend a lot of time looking at those, so that'd be a tough one for me to sound smart. Don't like Apple? I'd like to see Apple pull back some more myself. I'm kind of, how can you not be? But I'm kind of with Warren Buffett on this one. How's 150 sound? You know what I mean? Like, to get 150 a share, that just seems like a better deal. Jacob got it at 142. That's a good price, man. That is a good price. I'd be excited if I had that. Yep. Got you on the AT&T. CenturyLink. So this is a tough one because I like discounted stocks, right? They pay a large dividend. I believe it's the highest out of all of them. Not sure that they're going to keep that up. The dividend is ridiculous on this one. You get a little sense of the falling knife sort of thing. I wouldn't try to buy the dip. I'd wait for it to stabilize. Keep bringing it up. I'll follow it with you. But I'd wait for it to stabilize and then start to show a little oomph to the upside, like Micron. So this is a great example. It's hard to buy Micron, all that relative weakness, but once it's stabilized, we were talking about it breaking over this trend line, and that being your moment in time. If you treat CenturyLink the same, I don't know that it will bounce anytime soon, but if you treat it the same and look for that sort of finish to the downtrend, the little break there, we used to call it a little W pattern, but if you look there, then if you buy it at that point, sure, you missed out on a tiny little bit, but you don't have to suffer the back and forth. You pretty much catch the stock when it's ready to go in exchange for giving up just a touch of that downside. So treat CenturyLink the same way if and when it happens. Let it settle first, bounce, give you that little pullback, and maybe then it breaks above this downtrend. Oh, did they cut the dividend? Oh, my little guy hasn't updated yet. Yeah, no, I believe it because a while back we did a thing on the top performing dividend stocks or the highest paying dividend stocks, and I couldn't see where they get the money to pay that high dividend. So thanks for the update, Ryan. Appreciate that. Dustin, what do you think of investing in a fund versus buying the top 2 performers in the fund, looking at utilities? If you just try to buy the top performers in any fund, you're always going to be buying the top or close to the top. You're going to be overpaying for stuff. There's always going to be a mix of stocks that perform well and perform poorly. I would tend to look at the downside there and say, what are the discounted stocks in that fund? Let me look at the 40th percentile of stocks that have pulled back in a fund. I want a discount from a fund. Like, I want to pick the stocks. I want the discount there from stocks that a guy thinks is probably good stocks. It'd be like if you looked at our portfolios and you go, I see 100 stocks there. You got some good ones. You got some nothing going on stocks. You got some bad ones down there. What about right here, right? Some of the ones that are down a little bit, I can get a discount on. That's where I would look. It's just your personal thing. Like, some people chase momentum. They want to buy on the upside. They'll look at stocks like Microsoft and say, this stock is held in there pretty good. Salesforce.com. People look at that stuff and they go, I want to buy strength on the way up. And other people, Robert there, wants to buy dips, right? He looks at something that's fallen and says, is it worth the risk? I might have to hang out for a little bit. So it depends on where you're at, Maslam. I tend to be a discount guy myself, so a tough answer. Enrique, you might have the right idea, bud. Yep, taking a little downside exposure. Just taking a shot there. Devin, you got Devin at 24. Nice. So this is a great example there. Robert, if you want to look at this one as well. Here's an example of one where it's tough to buy the dips. I can see many opportunities where people had fallen for it being the bottom. I would have done the same, so I don't blame them. But by letting it stabilize, give you the first rally, and then take a break, you now have an opportunity to buy at this point with more people on your side. Not at this point now, but you know what I'm saying? Like, you get this little break. Even if you waited for the break of the downtrend, just a silly little line. It's so silly, but if you draw the line, when you break a downtrend, you'll always see that burst. See that burst right there? You got 2 days there with good volume. You got a quick pressure move to the upside. You always see that when a trend line breaks. I'd be more inclined to try it there. Anyways, the question was on DVN. You got it at 24. I love it. I'd lock in maybe like 26 if you can. I'd expect to see it pull back maybe towards these highs right here, maybe as far as like 28.50. So if you want to use like some sort of mental trailing stop or whatever, 26.50, just to allow a little room. No way I'd let it go back to 24. Got to lock in some of that profit. Wow, I gotta go. I'm not I'm not supposed to be getting. You guys are getting me all in the mood here. Craft, yeah, it tried to recover a little bit today. That's going to be, we talk about it, where you take a boulder and you throw it in the water, makes a big splash for a while, water's going everywhere, it's unpredictable, you have no idea, and then eventually it calms down. They will work their way out of it. This is, to me, not the time to buy the stock, but it's certainly not a stock that's just going to disappear. That's my opinion on it. So you might consider it a discount. I don't know that like you get all excited about it here. Yeah, I did a video today about dividend paying stocks. Unfortunately, I made the video before they cut their dividends, so it's not technically accurate. I'm sorry about that. Anyways, that's all I got there. Okay, well, hey, I'm going to wrap it up there and get back to doing what we do here. I appreciate you guys watching. If we helped you in some way, maybe hit the subscribe button. And yeah, remember, no show on Friday. Going to take the day off. You guys enjoy, and we'll talk to you soon.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.